All right. Hey, hello everyone. This is our Halloween live that we have today. Looks like I've got a few of you on YouTube and just one here in Discord, but we're gonna wait just a little bit to see if other people show up shortly. But otherwise, this will probably be about a 30 to 40-minute session. We're gonna cover how algos are found throughout the markets, specifically the crypto markets, and I think I'll be using Bitcoin for my demonstrations. But really, like the stuff we're going to talk about is going to work for any network. So before we get going here, I don't know. Has anybody got any plans for Halloween? No, not so much. Well, I know I'm not going to a party or anything, but I probably will get dressed up. I have a costume that's like a Disney costume, like a Disney cast member costume. That I don't know. Maybe I'll show you some pictures later. But okay, I don't want to wait too long because this is all getting recorded too, and I don't have to edit it down too much. So probably go ahead and get started. Let's see here. So the first thing I want to talk about is just algorithms specifically. And what I'm talking about here is our trading systems that are run usually by bots with human assistance, or I mean, at the core of it, they were written by a human in the first place. So they do still have human emotion embedded in them. So I mean, that's what trading with markets is. It's about managing your own emotions and manipulating others and kind of following that process. Once that's like coded into a bot, though, what we see are repeatable patterns that if we can kind of latch on to, most of the time, unless you're a large hedge fund or a bank or something like that, these algos are going to be trading with a lot more money than you are. So if you can kind of piggyback upon their liquidity, you'll be able to make your gains that way. So let me just kind of flip over here. Let's see. Looks like, yeah, Andrew, you've got plans for lots of candy. Every year we get like a ton of candy just in case like a bunch of kids show up at our house, and we only ever go through like half of it. So we end up with candy for like the next month here ourselves. Okay, so this is kind of a kickoff week for a new a new chapter in Apex Trades. And for those of you that are watching this on the Kick Studios YouTube channel, just to give you an idea of what's actually going on here, I've partnered with Apex Trades, and as that is actually our like home Discord community now. And so as part of that, there are four of us, actually five, that will be giving different sessions throughout the week, live sessions and also learning sessions. We've got a really good spread of talent, whereas we all have some overlap between us, but also at least the four main presenters have quite different strategies, and we think that that's a real positive because. For anyone that's like learning or trying to hone in your own strategy, the thing that you don't want to do is just copy someone else, just because if it doesn't fit your own personality, you probably won't be successful with someone else's strategy. So instead, it's best to learn as much as you can about different approaches that are successful, and kind of pick and choose the pieces of those strategies that work for you, and kind of build your own strategy. And actually, that's what I've done over the last 6 years. As also part of what the things that I do. Of course, I've had the opportunity to dabble in lots of different strategies, and what I've kind of come up with currently, which is ever evolving, is probably a mixture of smart money concept type trading, which is based on liquidity and market structure. What we'll be talking about here today, which is following algorithmic trading. And that's probably going to be my main focus for a lot of these sessions here within Apex Trades, just because not so much the trading style, but the other types of things that I do frequently are things like, back testing strategies, and automating strategies. So building our own algos, and different things surrounding that. So it only made sense to me that we would go ahead and start, with an overview of one of the most prevalent algos that you'll find out there in the markets, especially the crypto markets. But it didn't have its start there. It started long before that in other markets. So we'll get to that here in a second. Let's see here. Oh, and by the way, I might as well kind of finish my train of thought with what I was talking about there. Our other two experts that we have giving sessions every week is we have MSol, who kind of specializes in traditional market trading. So if you're not into crypto and you want to learn more about Forex and equities and futures, and more specifically traditional finance, he's your guy for that. And then we also have Dr. Gray, and he specializes in things such as footprint charts and TPO, and a lot of more advanced topics that relate to tracking trading in non-traditional, and I say non-traditional by like not price chart ways. Okay, and I didn't mention Andrew by name, but of course he is the founder of Apex Trades, and he also focuses on liquidity and SMC style market structure trading. All right, so let me jump right over into the meat of what we're talking about here now. Let's get our chart up. And before we actually even look at price charts, let's just talk about the basics. So if you're here and this is like your first time like even looking at a chart, I kind of doubt that, but let's just talk about how to use some of the tools that I'm going to be using quite a lot here in TradingView, and we'll do that without the price getting in our way. So one of the things you find in the markets is the price goes up, price goes down. So we have a price that goes up and then it retraces, and then it goes up, and this pattern sort of repeats over and over. That's what happened there. Okay, something like that. Now, one of the things, there's a long history to this, and actually I have another video that kind of goes into the history of why the markets move this way, and how the measurements that I'm going to be telling you like all came about. So if you're interested in that sort of thing, I'll leave a link to that, so you can go back and watch that other video. But for this little live, I just want to like make it a little bit more streamlined, and I'm just going to talk to you about how to do the measurements and how to use it in your trading. Okay, and we're not going to talk about all the different types of algos. We're just going to talk about this specific one. You've probably heard, of course, that that markets are fractal. But if you ever stop and think about why that is, a lot of it has to, well, it's two things really. One of it has to do with human emotion, okay, which kind of works the same way. People are operating at different time frames and trading at different time frames. So of course, those same emotions are going to come into play at all the different levels that people are trading at. But a bigger part of that, especially these days, is the algorithmic bots that are running behind the scenes, because they're programmed, originally by a human, but using math. Okay, because when you're looking at a chart and price movements, it's all just math. So they're programmed with math, and of course, not only are they operating at all the different time frames, but also there's the only difference in when they run an algorithm is their starting point. And so their starting point usually, I mean, you could say starting point is right here where the current price is, but that's not usually enough for a bot to know what to do with that, unless it's trading, some crazy algorithm pattern like, a random walk, where you're not actually looking for patterns, you're looking for anti-patterns. But if you're going to program an actual algorithm in, you need 2 points. You need a starting point and another point that defines a range. Okay, so let's take this price movement here. The bot is not going to do anything for this first part of the move. It needs to have this first leg defined, so it's working on a range. And then what comes after will be the algorithm that actually, you know, drives what price action happens and how the bot behaves with buys and sells afterwards. So that's what we're going to look at. But that actually is also the reason why you've probably noticed, there's an example that sticks out in my head. I probably couldn't find it in the charts now, but it was, I think, in 2018 or maybe 2019, when Bitcoin was sort of coming out of the bear market, and it just kept repeating this same pattern over and over again. But each time it would repeat it, it was only 2/3 the size of the previous time it did that pattern, and it did it like 4 times in a row. And it just kept getting smaller and smaller. And honestly, it could have kept going further, but it just had gotten so small by that point that no one could trade it. But the reason for that is because when it first defined the range, it then did the pattern. But then the next time it went to do that, the range was smaller that it was operating on. And so the next time it did the pattern, it was smaller. And then again, kind of because of the way regression works, the ranges kept getting smaller and smaller, and so the patterns kept getting smaller and smaller. So it's not just fractal, but this also explains why patterns repeat. Okay, so you find them within patterns, and then patterns kind of in serial coming after each other. Okay, so we're going to be using the Fibonacci measurement tool here. This is actually the Fibonacci retracement tool. And I want to actually, before I get into anything, kind of talk about how you use it. Actually, I'll go ahead and do it over here. The only thing you really need to know to get started is you generally measure peaks, so either a low peak to a high peak, or the other way around, from a high peak to a low peak. And when you do that, you usually want to draw your measurement from left to right. Doesn't matter if it goes up or if it comes down, but you go from left to right because that's how time works on a chart. Unless you're using a funky chart, but most of our charts go left to right. Okay, so there's that. The my Fibonacci tool, as you will see here, I have configured in a very specific way, and I'm just going to bring this up here. Maybe like if you want in the Discord, I'll like post a screenshot of this, but you can also just kind of pause your screen right now and take a snapshot of it. Here there's a bunch of numbers, but at any given time, I only have certain ones turned on and off. And you can like manipulate all of these and then save them as a template so that you can get back to that setting very quickly at a later point. So this setting that I have is actually the one that I use, probably 75% of the time. It's called, for me, primary setup minimal. And all it's mapping out is a 50% retracement, a 0.618% retracement, which this is a special Fibonacci number that's based on phi, the Greek letter, although that is actually 1.618, but that's where this one is derived from. Then a 1, which the 0 and the 1 are just going to be basically the 2 points that you've picked when you drew it. And then I also have this special one that's negative 0.236. Okay. Now, again, in that other video that I mentioned, I go into the history of how like all of these numbers, why we use different ones. So I'm not going to cover that again here, but I'm going to tell you how this is used. So we have a movement that goes up. I measure it with my tool. Okay, it draws these lines for me. At that point, I'm going to wait for this to come down into this space between the 0.5 and the 0.618. Okay, some of you may have heard about the golden pocket too. There's actually 2 different definitions for that. Some definitions, this is the golden pocket between 0.618 and 0.5. By other definitions, it's actually this zone right here, a little bit lower between the 0.618 and 0.65. Doesn't matter, it's the same general area. price is going to come down somewhere in this area. And at that point, if you get a reaction and you start moving back up, there is a very, very good chance that the price will come up to at least this first target, which is 0.236. Okay, and what's cool about this is it doesn't really matter if the price comes down just to the 0.5, or if it comes down a little further, or if it goes down all the way to the 0.618, or in some advanced cases, it could actually go down all the way to the 0.707. Anywhere in this range, the target, it stays the same. It doesn't move up and down, so you don't have to keep changing your measurements. The target is always 0.236, okay, negative. And the reason it's negative is because it's above this particular line. Now, sometimes it goes even further. I'll add target 2 and 3 on here. Okay, so sometimes it'll actually go up here to negative 0.618. And just short of this is actually 1-to-1, which means that this line here is the exact same length as this one here. And sometimes it'll go all the way up to this -1. So any of you that are familiar with Elliott Wave, it's a system I used to use, but I don't really trade with it much anymore. But like once you learn the rules, it's hard to forget them. But if you are familiar with that, what you'll find is this is the the most likely place for a wave 3. So here we have wave 1, wave 2. That's the most likely place for a wave 3 to hit. Second most likely place is right here at this 618. Okay. So the way you trade this usually is you have an impulse move, you wait for the retracement, you're waiting in this zone, you look for the reaction that you're expecting, and then you, in this case, long, and probably take profit here at this first target, and maybe not a full profit, maybe you take half profit, and then here are some other targets that you can take profit at as well. Now, as it keeps moving, you just remeasure, and I'll show you that when we get to the examples of how we do that. Now, this can also work going in the opposite direction. So as we're coming down, you may see something like this. So you do the exact same thing. You measure from the peak to this peak, goes right to that zone, and then hits one of your targets. Okay, so before I go on and actually bring this back into price action, does anybody have any questions? You just type them either in YouTube or in Discord. I get both of those sets of questions here in the same place. Okay, no? All right, so I'm going to kind of move back into price then, and we'll look at a couple examples. Let me go ahead and clean this chart up. All right, and I'm going to jump back in time. Oops, there we go. And we're going to go back to where we had our, like the start of what some people are calling the bull run. But it goes all the way back here in November of 2022. That's when we hit the macro low, so far at least. I think it'll hold. I mean, we're more than up double this point. But this macro low we hit right here. Looks like 21st, 22nd of November, where we hit something like 15,400-ish. Okay, right down here. So I'm just going to use this as an example point, and we'll look at how we implement this. And I'm going to do this on the 4-hour chart, just because I want to actually do this demo going all the way to the current price action, so that we can talk about, well, how do we use algos to like predict current price, and what can we do for that. And so if I go too small, then I won't be able to do that. I'll tell you though that I rarely actually trade on the 4-hour. I'm more of a scalper type trader, or maybe day trader. So 15-minute is the time frame that I trade most often on. But looking at the 4 hour and the daily are things that I do on a frequent basis, just to give me a bigger picture idea of what's going on. And actually, there's a point in here where you'll see that really helped us out. All right, so I'm going to start here at the low, go up to the high. And so here's our first move. It was an impulse move. What's an impulse move? It's a move that usually it has 5 waves. I mean, by definition, an impulse wave has 5 subdivisions, not 3. That would be a corrective wave. There is an exception to that, which is like an ending diagonal. We're not at an ending point here because price action has been going down for months here, and so this is actually a reversal point. So we have an impulse wave, then we have a correction. Look where the correction comes down to, right into this area between the 618 and the 0.5. We go back, we go up, and actually it I think misses the target by like a tick or two right here first and comes down. That's probably where I would have tried to take my profit, and if it came back off of that, I probably wouldn't be patient and wait. I would probably just take it there because that's the reaction that you're looking to get, and that reaction is, in this case, a big volumetric. It's not really a reversal here at this point, but it is definitely a rejection. Okay, but so we hit the first target, although then we keep going. So at this point, I would move the bottom of my measurement to the lowest place that came into my zone. So like that area that the algo used. And this is something that people ask me all the time, which is, well, how do I know which pivots to use? And the best way to know which pivot to use is you use the pivot that shows evidence that an algo used it. Okay. Here, our evidence is that it came down, touched this, and then hit target, and then had a reaction. That's proof that there is algo participation right here in this zone. Okay, so that's going to be my new start of the range. Okay, and so maybe I start here. Okay, didn't come back down into my range. Did kind of, I don't know, this coincidentally maybe. Obviously not a coincidence because we had a huge reaction again. But we probably wouldn't have been in a trade at this point. Right, so it comes down, goes back up. I'm going to leave my pivot there and just measure going up. Here it does the same thing. Now it actually went a little bit higher. Okay, now it comes down and look at that. It does hit my zone, came into this area between the 618 and the 0.5. And then we go up and up and up. Not only hit the first target, which notice after we hit that, we had a reaction, but then it went on and it hit the second target. Okay. So that's good. Now here's the point that like started us off. So we will move this to there. And then here, at first we would probably move it here, but then we went higher. So we would end up with it up here. Now, came down, notice we had a reaction in this zone, but kind of went up and then fell through. So at this point, I'm going to talk about like how most of the algos behave. And so as price is coming down, the algo that took their profit up here, it's still a buy side algo. Okay. Now that buy side algo is going to then wait until we come back down into the zone again. Once we get into, past this 0.5, it'll start buying. So right here, it's buying, all the way down to the 618. Okay, it's defending here, and that's why we have a strong reaction push back up, but then price comes down again. Okay, tries to defend, and we break below 0.65. So we're out of the golden pocket at this point. What most algos will do at this point, and this is ever evolving, and we never know, but you can kind of watch reactions to determine what's actually going on. So what they'll do, they'll stop out here. So the algo stops out here. You may get short at this point. However, just know that if you're getting short at this point, you're doing so probably without algo participation on your side. Reason for that, is because the buy side algo has gotten out. The sell side algos have not had a pullback yet to get in. Okay, so when this bot got out here and stop lossed, it's going to flip around. So now it becomes a sell side algo, and it's waiting for price to retrace up in this direction. Okay, but notice we never get that, from here. It never comes back up to there. Okay, so we go down, price actually increases, still looks like we don't have anything going back up. This goes down again, so we extend this further. Okay, and then what happens? Okay, we kind of tootle around sideways for a month, 2 months, and then we start going back up again, completely break through this 6.5 area. And just so you know, for my own trades, I don't really use this 6.5. I use this 707. That's sort of that's where I decide that me as a trader, not as a bot, this is when I think that we have changed to the other side. And so it invalidates any of the bearish sides now. Okay, so when that happens, what am I going to do? I'm going to switch up here, and this is going to come down to the lowest swing. And this at this point is right here. Oops. Right there. I'm going to just switch this template over here right quick. And we just start ripping up. And so you notice I can keep following this up, and it's actually never going to hit any of my pullback zones. Okay, I'm a pullback trader. I'm a retracement trader. So that just means that at this point, on this time frame, I'm not going to get any trades. I could switch down into a lower time frame, which like I said, I'm probably working on lower time frames anyway, and get some of these trades. But at this point, we just keep going up and up with no pullbacks. That's just what happens, sometimes in bull runs. Okay, here kind of come down, but still we're going up. So we just keep moving this up to there, and then we double top. I think that they're pretty much equals. Okay, so that's great, but the problem with this now is if I'm even if I am used to trading on the 4-hour time frame, you see what my algos, like the time frame that we're covering here now is like months. I mean, this was 58 days. That's 2 months time. So I'm not going to be finding any trades with this. However, I want to keep track of it. So what I'm going to do is I'm going to just change this, make it all blue, right? So that I can maybe get involved in some other trades. So maybe off of this high, I measure down to here. Right, let's kind of look back. So now I'm kind of back into that trading zone that I like. Time frames. Comes down here, goes right back up into our zone, and then we hit target right here, and then notice kind of comes back into that target zone. So what we do, same thing again. We move the start to here, and this initially here, but then we kind of go a little lower. So we go there. We go up, and we actually hit 618 here, but then we kind of come back up and break it. And not only did we break it there, but we also broke this golden pocket. But this is why I really like using this 707 these days, because especially with Bitcoin on perp exchanges, it's just more volatile. And I am using Bybit here. So this is a pretty volatile exchange with pretty good volume. And so I like to give it that little extra room, and this is exactly why. So it stayed within the 707 and then went exactly right here down to target. You notice it went a little beyond and then it came back. So right there at target. Okay, perfect. So what do? We move this to here. We move this one to there. Okay, we don't get a pullback into our zone. So this kind of just keeps going lower. No pullback there. All the way down here now. Okay, now before we talk about this, notice what's happened here on that bigger time frame that we were measuring, which is this blue measurement now. We have not only hit the 0.5, but we like kissed the 618, and we're going back up now. So even when this got to this area right here, when it looks like, you know, if you notice here, there was some reactions going on right in this 618 area, it would be a potentially dangerous trade to take, you know, take a short here. The reason is because of what happened right here, which is we had a big reaction off of the much larger algo that was patient and waiting for it to come back down to the 618. Okay, and let's take a peek at what happens. There's the first target. And there's the second target. Notice it went right up, touched that target, and then we had reaction off of there. Okay, so we're coming down. You know, a lot of this is going to be the same again, but the way you get good at trading in this style is to just do it over and over again. And when you see it happening over and over and over again, it builds trust in your own, in yourself to really take these trades. Okay, here's another one. So back to this setup, right into this zone, right to this target. This might even be second target. Yep, hit second target right there. And then it went back up. Okay, so what would we do here? Measurement. Okay, this one went back up and broke. So wouldn't be in a short anymore here because we had a big retracement. And another thing I want to mention right here is if you are an SMC style trader and you trade things like order blocks quite frequently, it's hard, like for me, it's really hard to be biased, you know, with my SMC trading and also have this type of you know, algo following strategy in my back pocket, because quite often they don't, you know, collaborate with each other. This is a really good example of that right here, where we had a retracement. You notice in SMC, a lot of retracements don't come only to the 618. The really good retracements come almost all the way back up to this, and the reason for that is because this is an order block right here. Okay. Actually, I would draw it more like that. And you notice the price came into that order block, and then it went away. Now, I mean, the extreme order block is actually here, but it came into that as well. So just something you have to balance. Now, what's really powerful is when your SMC, you know, indicator strategies, you know, things like order blocks and whatnot, when they align with your algo following principles, like right at the 618, that's a super powerful signal that, you know, like that there's large amounts of people that are watching that, large amounts of bots that are using those calculations, that's like a great entry point. Okay. Often I use both of them together, mostly one to invalidate the other, which is probably why I don't trade as much as I used to. However, most of my trades are a lot more profitable than they used to be. Okay, so kind of finish this up. Where are we? We're in May, so we've got a few more months to get to present. I'm gonna kind of skip ahead a little bit because we went sideways to down for a long time here. And don't get me wrong, there's trades all along here that you could be taking. Like for instance, I see one right here, you know, that hit that, went to third target. Here's another one right here. Hit that, went to second target. All right, and then you'll have stuff like this, which is where this strategy is going to leave you out of a lot of trades probably, where we had this extended run up starting in June. And you could have gotten into a few things here, like right here, went right to the 618, went right up to the third target. Okay, so that's a good start. Here, we never came back down, and we just took off and went up and up and up. And then we went sideways forever. So if you're trading on a smaller time frame, that's where, like on a 15-minute, there was tons of opportunities through this zone, but on this 4-hour, not so much. Okay. I don't really see any through here. I think these downs don't quite reach the retracement levels. All right, we had a big dump right there. We had a big pump right here. That pump looks like we could have caught it right here. So came down. This one did pierce through 618 a little bit, but we did stay within the 707 and then popped up second target. Okay, I see a few in there. All right, and so here we're almost back to, like, we're within the last month now. And so here we had the fake news pump. Okay, and this is the low point here. Now you could argue that maybe this is the low point we should be tracking. So let's use that one first. So we went up, hit our zone, but then we kind of came down below it. You know, yes, this is, if we're talking Elliott wave, this is valid because this is like 786. But I'm not trading Elliott wave, so I would discount that. And instead, I would probably use this point like this, where we did come back down into the 50. And where did we go up to? Of course, third target, right up there. And then now we're kind of just hovering right there. Now, to kind of finish us up for today, but actually before I talk about like where we are exactly right now and how I'm, like, what things I'm waiting for, are there any questions that you want to chat about? Okay, well, if you think of any, just type them in there and I'll get to that. So what I'm looking at right now is not using this low over here just yet, but I'm going to start with this low. And because of the fact that these two pivots, you know, we had them, and this one came back down perfectly to the 618, then went up, hit the third target. I'm taking that as a sign that there was algo participation right here. Okay, so in that case, I'm going to move this all the way up there. And instead of leaving this down here, I'm going to move it to the lowest point, which actually looks like this one right there, is where that lowest point was. Actually, you know what? I'm kind of curious. I'm going to turn this on. Yeah, that on that big algo too, we also basically went and hit the third target for that, you know, 2-month long range. So perfectly went up here. So this is, you know, not surprising that we hit here. Now remember, this was all driven by, you know, a lot of hype, although this technically was, this was the fake hype and this was the supposedly more real hype. I don't think there's anything to corroborate any of that yet, but does look like we're moving. Now, so this is how I would draw this. A couple things. Here's what I'm waiting for. I'm trading on the 15-minute, okay? But on this 4-hour, if I'm looking at this range, if the price comes down to this particular range here, which is 32.4, call it. If it comes down here and we get a reaction, like moves up, I probably will expand my spot position at that point. You know, as, like, you know, my long-term holdings, because I think that's a good place to buy. Clearly, if we come all the way down here to 31.3, that's even better because it's lower. So I will probably, I don't have them done yet, but I'll probably stack, laddered buys within this range right here. Okay. Now, remember I told you that the thing with me is it's difficult to forget about the things, Elliott related. And so the Elliott in me kind of sees something different going on here. And what I see is an impulse starting right here, where this is 1, this is 2, that's 3, this is 4. I mean, this looks like a 4. It's just a big old triangle. And so that means that we're probably not going to go, below this low, and there's going to be one more push up. Okay, so let's just talk about, if that plays out, what is that going to mean for us? So the thing with that is, if this is a 3, what I was previously measuring, okay, off of a 3, the 4 for your Elliott generally is not going to come all the way back to the 0.5. It's going to actually come to between, by Elliott's rules or their guidelines, things that happen probabilistically most often, it's going to come down between the 0.236 and the 3.384. In my experience with Bitcoin, it actually comes down to the 0.33 quite often. Okay, and so if I switch this, you can kind of see, well, what has happened here. If measuring from here, because this is the wave 3, it comes, basically right to this 382. So we could be low enough for this to just take off. If indeed this is 1, 2, 3, 4 triangle and a 5. Interesting, if I measure from down here, it comes exactly to the 0.33. So, Elliott wise, and this is why I hate Elliott, by the way, because there's always a million ways that you can look at things, one of which you will like and will fit whatever bias you want. Okay, that would mean that this is the bottom of this one here, and it's actually 1, 2, 3, 4, 5. And if that happens, then yeah, we've come exactly to this 0.33. Okay, so that just means that what I said earlier still applies. If it comes all the way down to here, I am definitely going to expand spot positions. But in the meantime, I am looking for this to potentially break out into a wave 5, and I'll be trading that probably on the 15-minute time frame as we go up one more. So what does that look like if that happens? Okay, do we hit up here to this 236, which is 39,000, or even 43 up there? Let's just go a little bit conservative and say we only come up here to this 39, or maybe we overshoot it a little bit, hit like 40-ish, and then come back down. So if that were to happen, and this is truly the bottom of this portion of this wave, then we will get something that looks like this. Okay, and notice where the retracement is likely to come back down to, somewhere right in that exact same zone. So that's why for me, for my big spot positions, I'm not really worried about missing the boat here, because yeah, if this comes down now, great, I'll buy it. If it goes up first to this point and then retraces down, it's going to come to that exact same zone. We're going to retest 30 to 32,000 at some point. And what will that big drop be? Well, that'll be part of going back one more pivot, where this would be 1, 2, 3, 4, 5, and then coming back to the same area. So that's where I'm going to probably load up more on spot, somewhere in this general 31 to 32 area. But in the meantime, I'm thinking, I wouldn't be surprised if we came down. A lot of it's going to be news driven, and we have some big news coming this week, both with geopolitics going on and CPI coming out, FOMC rate information coming out. So I expect this triangle, which has been all sideways for quite a ways now. What has this been? 2 weeks? No, just 1 week. So a whole week of sideways, we're going to get a lot of volatility for the rest of the week is my anticipation. Okay, so be ready for that. All right, I'm going to kind of pause here, see if there's anyone that has any final questions. And if not, I will go ahead and kind of work to closing this live. Okay. And I do realize that, you know, we're right in the middle of the workday here in the US, and actually it's still workday over in Europe right now too. So I know this is probably not the ideal time for most of you to do live. So in the future, I will try to do them later. But if you don't want me to do that, then, you know, this to me is a great time because it's after the New York Open and all the trading has settled there. We're in the middle of the day, and then we're kind of away from the close. So we started at 11 a.m. Eastern time, which is my time here. But maybe I'll move it around different. I know the other guys in Apex Trades, they have, you know, theirs scheduled later in the day too. So I also thought that having, you know, more of a variety would be best for us to get started. Okay, so those of you watching this and you know, maybe seeing me for the first time, you know, please go ahead and, you know, like and subscribe, that whole spiel. In fact, here you go. Give you the reminder right there. Also, come visit us at the Discord. We have, you know, sections of it that are, you know, completely free, just like this video today is available to everyone. And we also have, you know, 2 levels of subscriber VIP subscriptions that give you access to a lot more content, a lot more tools that we have, you know, including screeners and bots that you can, you know, shadow trade or copy trade, things like that. We'd love to see you. And actually, I made a, let's see, which one is it? Here you go. There is a kickstudios.com/apex, just a little shortcut for you. If you go there, it will take you directly to a non-expiring Discord invite for Apex Trades. So hopefully to see you there. And anyone that's already in the Discord, you know, thanks for attending today. Or if you're watching this later, thank you for watching. And I'm gonna go ahead and stop this recording now. You guys have a great day, great Halloween, be safe out there, and we'll talk to you soon. Thanks.